Are you a buyer in today's market? If so, you've probably heard of terms like rate buy down or 3-2-1 buy down or 2-1 buy down. There's a lot of terms being thrown out there. Hi, my name's Josh at Red Letters Lending, and I wanted to make this guide for you to explain what a rate buy down is. So I made this guide, so let's go over it. So the first question I always get is, Josh, what's a buy down? Well, a buy down typically comes from the borrower as a seller concession, and they're going to buy down your interest rate. So there are two types of buy downs. There's a permanent buy down and there's a temporary buy down. So the next question I get is, Josh, what kind of loans does this qualify for? Well, you can buy down any loan. I got the five main loans here listed: VA loans, FHA, ARMs, jumbo loans, and conventional loans. So as I said, there are two types of loans or buy downs. There's a temporary buy down and there's a permanent buy down, and there's pros and cons to both. And I'm going to go through those with you so you understand them a little bit better. So a temporary buy down, you'll see 3-2-1 and 2-1. What that means is if you get a 2-1 buy down, you're going to start at a market rate that you're going to have for the entire length of the loan, the entire 30 years. In your first year, we're going to buy down the interest rate 2 points in the first year. The second year is going to be bought down 1 point, and the third year it's going to revert back to what the market rate was. And the 3-2-1 is just that. It's going to buy it down 3% in the year 1, 2% in the year 2, 1% year 3, and then it's go back to the market rate is. Again, these are temporary buy downs. And then a permanent buy down is just that. It's going to buy down the rate for the entire length of the mortgage, the entire 30 years. So this is one I particularly really like to talk about, and I think it's more beneficial, and I'll explain why here. So the pros and cons on a temporary buy down: one, you're going to get a lower rate than a permanent buy down, typically right off the bat. If you do refinance before the complete buy down, the temporary buy down ends, you can take those proceeds and revert them back to the mortgage when you get your refi done. And it's typically the seller is going to pay for it. The cons is you cannot qualify at the lower rate. You have to qualify at what the market rate is. So it does not help you in qualifications. Again, it's temporary. I call it a Band-Aid. It is great in certain circumstances. And if the rate or the market was to drop below what yours is, you'd have to refinance to get that lower rate. And there are some complications you need to be aware of. It means if you get a new loan, you get to refinance your home, you need to re-qualify. The property has to re-qualify, your credit has to qualify, your income, you need a job. So there's a lot of things to think about going forward in the future. Now, a permanent buy down has a lot of pros. And it's actually, like I said, it's the one that I'm most in favor of. I've been doing this since, 2009. And this is the one that I particularly like the most because I think it has the most benefit for the buyer. The rate is fixed for the entire length of the loan. You don't have to worry about it fluctuating at all. You can address the housing affordability crisis that we're seeing right now. We're all feeling the pains of higher interest rates, and this is one way we can actually get a lower interest rate. That means lower payment for the entire life of the loan. You don't need to worry about if you lose your job, if your credit score goes down, if you have a bump in the road, nothing can change. So the con is if you do need to refi, if the rate drops below, then you would just do a straight refi on that. There's no seller credits to get the refi done. So as you're going to see below, if you're on your mobile, look below. There's going to be several videos. I'm going to dive deep into the numbers on what the rate buy downs are on a temporary and a permanent. We're going to go over the numbers pretty in depth. If you're on a desktop, look to the right of your screen. There's going to be several videos over on the right. So if you have any questions, please reach out to me. Let's talk about your unique situation, and let's find out what the best option is going to be for you and your family, not only today, but looking into the future 3, 4, 5 years down the road. Thanks and take care.